All right, what's going on, YouTube? Been a while. I'm back. Shout out to Baby Prince 84 UK. Per subscribers' request, we're going to look into a company. Ticker symbol MBUU, Malibu Boats. All right. I've looked at the financials, look at shareholder presentations or company presentation or investor relations. I did some comparison analysis, and hey, per the usual, let's get into it. All right. So ticker MBUU, Malibu Boats Incorporation. Okay. The business is located in Tennessee. All right. This is a pretty straightforward idea. They make boats and they sell them. All right. Now, their strategy to market is different from the other boat builders, though. So, excuse me, I've looked into their actual presentation. So, this is their strategy model: innovation, product and distribution white spaces, vertical integration, strategic acquisitions of premium companies. All right. So, I'll sum this up. All right. What they're pretty much doing, their idea is we're gonna buy the competitors out. We're gonna consolidate and monopolize. All right. Why try to outcompete the competition when we can just buy them? All right, and there's something to be said about that. In America, in capitalism, you just. Anything can pretty much be bought to an extent, okay? But you can buy cash flows, you can buy companies that produce the cash flows. So some of the risk that I see with this strategy is, yes, it can have the reward is really lucrative. They can have a really high return on invested capital, all right? And the risk is pretty high too, so they can mess up and they can buy the wrong company for the wrong price, and that would definitely mess up some shareholder value. All right, so that's their strategy. All right, and I pretty much, what I like to do when I look at these companies, I like to pull up their sectors and maybe pull up a competitor. All right, so I found another competitor, Marine Products Corporation, and they are headquartered in Atlanta, Georgia. All right, so same idea. They build boats and sell them, but their strategy to market, as far as an investor standpoint, is different. Okay, so their strategy is, we're going to pay dividends, we'll do some share buybacks, and we're going to organically grow the company. All right, we're going to do it through their cash flows. All right. So I wanted to, it's something to be said. Let's look into some things that I've noticed about Malibu, which, I mean, let's see here. So, okay, so shares outstanding. All right. From a 10-year standpoint, they had like 11.1. And then their trailing is a little over 20. So they pretty much doubled their shares outstanding. Whenever you see, and these are the basic weighted shares, pretty similar. So if you didn't know the diluted weighted average shares outstanding, that's pretty much, that's including all the probable or possible dilution that the company can incur with the shares, because there might be outstanding warrants or stock derivatives out there for compensation for other parties. If in this actual business model where they buy out other companies and consolidate, I could expect there might be some sort of special warrants out there that could affect this. So far, it's nothing, but that's something to keep a lookout for if you're a shareholder of this company, if I was anyway. But if these two numbers are similar to this similar to where one's 20.5 and one's 20.6, nothing to worry about. Okay. Doesn't pay a dividend. Now, here's something I've noticed about this other company, Marine Products Corporation. All right, we'll go back to the beginning. All right, so we'll look at 10 years. Basic weighted shares outstanding, 35.6. All right, now we'll go to trailing 12 months, 34.3. So it's flat. Okay. And diluted weighted average shares outstanding is the same. All right, so there's no warrants or anything out there. But with this company, with Marine Products Corporation, their strategy is a little different. All right, they're going through for the cash flow. All right, so let's look at their cash flows. All right, let me see here. Let's go to Malibu. Oh, we'll go to the cash flow statement. Leverage cash flow, leverage free cash flow. If you look here, they get a boom in the leverage free cash flow, of course. Okay, and that's good. All right. So we'll go to Marine Products and we'll look at their cash flows. Let's see here. Bear with me just 1 second. Okay, yep. So kind of similar. Of course, they're going to be smaller numbers because the Marine Products Corporation is a smaller company, so they're doing less money. But the valuations are different, right? So same idea. They had a little jump there. We'll go to valuation. This is a $489 million market cap. But you see that they have no debt. And they have net cash, which I love. Great balance sheet. Okay. Let's pull up my calculator. So we're going to do some basic math. 489.77 minus 66.22. You're really paying, if you buy the company, you're really paying 423 million and a half. Okay. Or 423.55 million. All right. Malibu Boats, we'll go to their valuation. They got a little bit of debt here, but they're still net cash. All right. So it's still something to consider, all right, in this environment, especially with a company that has this growth strategy. Okay. So I want to, here's something to consider. In these cyclical type of companies where the macro can highly impact your ability to grow, all right? That's something to consider as far as the setup here. This is what I think is going to happen with Malibu Boats. I think next year they're going to get crushed. I think their stock is going down next year. So if you want to buy them, like if it were me personally, and not financial advice to anybody, I'd wait for next year to buy this stock. If I really wanted to get in the boat industry, which I don't, because I view that as like more of like the toy sector, the toy market. Because let's be frank, boats are toys, all right? So unless they're commercialized boats that serve transportation, logistic motives, or whatever. But if you look at just some basic comparison metrics, look at this, all right? Let's look at their growth. This is the Marine Products Corporation. They rely on organic growth, like healthy growth, as averse to Malibu Boats, which they rely on inorganic growth. They buy their way out of things. All right, they buy their growth. So this is the problem you have with these type of companies. All right, like look at all these growth metrics. They pretty much outperform. All right. And that's not to say that's always going to be. When the macro flips and it's an acquisition type market, maybe Malibu Boat stands to maybe benefit more than MPX strategy. All right, but this is something I noticed. Look at this crazy. Look at this. So MPX, their levered free cash flow growth year over year is 655%. All right, and their operating cash flow growth is 533%. We'll go to Malibu Boats. Their levered free cash flow growth is 76% year over year, and their operating cash flow growth is 12%. And when it comes to EBITDA and their projected forward revenue growth and EBIT growth, I mean, it's all negative as opposed to MPX, where once again, this is the benefit of when you have a company that's more focused on organic, healthy growth via free cash flow strength. All right. And I think that with the cyclicality, you have to think to yourself, like to me, I think to myself, what is the value proposition of the company? All right. How are they going to deliver the value to me? All right. If their free cash flows are inconsistent and it's a cyclical market or a cyclical sector, I think a dividend is appropriate, because if you can't really depend on free cash flow consistency as far as to do buybacks or whatever, I mean the stock price can be so volatile, you can probably just not ever deliver value to the shareholder. So I think a dividend is a way to actually demonstrate the value. There's something to be said about paying a premium for free cash flow consistency. And if they don't have free cash flow consistency, they can create free cash flow consistency via the dividend payout. So that's something to consider. And since 2014, so since 2016, from what I believe, hold on here. So since 2013, they've been paying a dividend. They've been paying a dividend for 10 years. So, I mean, that's something that just truncates all the noise. So if you pay a dividend and you've been paying a dividend this long, that's one of the propositions, and they can still grow. All right. So the boating sector. All right. I mean, me personally, I'm not interested in the boating sector because the margins are not really. I like higher margin businesses. At least if I want to get in your sector, I want the leader in the margin, and as far as not just the gross profit margin, but all of them, taking into consideration everything. So that's my take on Malibu Boats. I would not buy this stock. And actually, I wouldn't even get into this sector. I don't think that there's much value to be had in selling boats. I think the only people that win are the people that work on selling boats and enjoy the benefits of that. I mean, there's a lot of people that like that sea life. So, I mean, good on them. But as an investor, I would pass on this category, especially in this macroeconomical environment. But that's just me. To each his own. I think there's so much more opportunities out there. But with that being said, those are my thoughts. Yeah, I mean, it's not a lot of people are going to like that, but there's no super investors over here buying MBUU. All right, I've looked into that as well. All right, so some things to consider. Hey, if you got value out of this, please subscribe, like the video. I know it might not be what a lot of people want to hear as far as like my thought process on this stock, but this channel is not for the heart of heart. I'm a risk taker, and I believe in the hard truth in things. So, I mean, that's just my take. Now, I mean, there's always value to be had. if everybody was right in the market, nobody would be making money. So I could be wrong, but it is irrelevant to me because I'm not good. I don't plan on getting into the stock. All right. So with that being said, hey, thank you all for your time. Hey, shout out to my subscribers, all 19 of y'all. If you're watching this video and you got value, consider subscribing and write a comment down. I want more people to comment on these videos. If you want me to do another review on another stock and what I think about it, I'd be happy to entertain that. Yeah, with that being said, thank you and have a good day.